All right, hey everyone, welcome to another episode of Trading Bitcoin with your host, Tone Vays. This will have to be a very quick show because I am running out. I need to check out of the hotel room as well. All right, let's go to the charts. Just going to be a quick update. All right, weekly chart. The weekly candle is not yet of any interest. It remains in a downtrend. You can see the MRI count remains in bearish territory. The Lucid SARS in bearish territory. We would need to get above the prior swing high on a weekly scale in order to activate any kind of serious bullish momentum. You can see how the short-term moving average is about to turn down and turn down quickly. Okay, let's go to our 4-day allocation chart. It is showing us an MRI warning buy opportunity. It did a pretty good job at giving us an MRI buy opportunity back here. We went nicely bullish right off of that. We added to that position all the way through, but unfortunately, this did not fully reverse the market. I was hoping that this would be a secondary higher low. This one got me very concerned that it wasn't. We had a little bit of a rally off of the Russian invasion of Ukraine, but not because Russia invaded Ukraine. The rally took place because Russia got removed from SWIFT, and a lot of people thought that they could resort to Bitcoin. They haven't yet, but I still think that is the future for global finance, because you can't censor Bitcoin payments. Nobody could use Bitcoin as a political tool for control. So I'm not putting that much stock into this orange arrow. I don't think it's all that critical, definitely not like this one was. So we wait and see. Right now, this is looking like a nice dead cat bounce, and most likely will turn the price of Bitcoin down. All TA is pointing to lower prices. Fundamentally, I'm always bullish on Bitcoin and it can break out any minute, but TA is telling me that this is just a dead cat bounce and we should have one more critical low. Before I go on, guys, the financial summit is going to take place in the Dominican Republic. Check out the website, thefinancialsummit.com. This is our longer video. It's about 2.5 minutes of all the highlights from the last one we had in Dubai. My calendar hasn't changed. I have not had time to add anything to my calendar. Looks like I may be going to Turkey this weekend. There is an event going on there that I'm interested in attending. And I'm not sure where I will be this week, maybe somewhere else in Europe. It really depends on how tyrannical they are on COVID lockdowns and whether I want to support that country's tyrannical views on COVID lockdowns with my tourist money. I am going to go to the UK. The UK has dropped all restrictions. The UK was on my borderline shit list for what they did earlier in the pandemic, but it looks like they've dropped all restrictions. So it's okay. And I'll see what other EU countries have dropped restrictions. I'm not a huge fan of the EU. As you guys know, I'm very critical of the EU. So I kind of put my money where my mouth is, and I don't like to support places that I don't like. So I don't plan to spend too much time in the EU. I will be in London for Alternative Investor Management Summit. Okay, next, the daily chart. We had a huge day yesterday, mostly due to the Fed announcement. There is a concept called the FOMC drift. I actually talked about it yesterday on a channel here in Brazil. It's Lingo Crypto. It was a pretty cool channel. A friend of mine, I joined him on his channel. I tweeted it out as well. If you guys find it on my Twitter, it was mostly in Portuguese. I mean, I spoke English, of course, but I was speaking English, and he was translating. So that was a really fun episode. We pulled up that paper. I can Google for it. I have a picture from that paper. If you Google FOMC drift, you'll find that paper. So the TA on a daily, I don't find this to be anything of significance. I think there's major resistance at the $41,000 area, and I remain bearish in this daily chart as well. The CMF is not all that impressive. And oh, look at that. So the funding rate, look how much time it's accumulated down there. It's pretty much break even right now. So it's neither bullish nor bearish right at the moment. Okay, well, let me talk about this now because I don't know how much time I have. Let me zoom this. Sure. So this is the FOMC drift, the Federal Operations Market Committee. And on the day that the Fed announces a rate hike or a rate lowering, the stock market goes up a lot on this day, on average. So this is a chart from 1994 until 2013. So during that 20-year time period, this is what the stock market did outside of days like yesterday. And this is the day before the announcement, the day of the announcement, and the day after the announcement. So you can see how the stock market has basically broken even. So this is what it means. If you held the stock market for 20 years, from 1994 to 2013, I know it says 2011, but this paper was revised in 2013. And for 20 years, and there would have been, trying to think how many days, I think it's about 8 days a year that they do this. So 8 days a year for 20 years. So that's 8 times 20, 160 days. So if you held the stock market for 20 years, but without these 160 days, you made absolutely no money in the stock market. But if you held the stock market only for these 3 days, the day before, the day during, and the day after, you would have made the same amount of money as holding the stock market for 20 years, only holding on these days. Now, there's only been 160 days, but we're also looking at the day before and the day after. But the day of is the day that makes the most money. So you would have averaged 0.5% gain, almost 0.5% gain, only holding the stock market on these 8 days per year. You would have averaged 0.5% per announcement, and you have 8 announcements. So about 4 to 5% per year, you would have made. Actually, it would have been cumulative too. So you probably would have made about 6 to 7% per year, only holding 8 days a year, only buying like in the morning or buying it, the evening before, and then holding it through the day of the announcement. That's the drift. And then there was an additional analysis done from March 08 until more recently, and it found that the market went up even more. And on the days that were positive, it was very positive, and on the days that were negative, they were a little bit negative. So and here's like the 30-day span before and after the announcement. And just if you want to Google for this, I don't know if, yeah, here we go. FOMC drift paper, Fed. The paper was from the Fed. There it is. There's the paper. It was by the New York Fed. So you saw what I Googled. So that's the paper, originally published 2011 by the Federal Reserve. And it talks about how the market only goes up on Fed days. There's the chart. There it is. On the days of the Fed announcement and all other days. non-Fed announcement. So they know they move the market to the upside no matter what they say. So there you go. So we can look at the stock market, and you can see how much it went up yesterday, right there. And I told you guys yesterday that Bitcoin being up while the stock market was down early in the morning is probably means that the stock market will rally hard on the announcement. And you can see right here, here's the funny part, right? So here's the 2 p.m. Here comes the announcement. Here comes the crash right after the announcement. And here comes the rally. And here's the paper from 2011 showing you that here's the announcement, here's the crash right after the announcement, and there's the rally. This is a paper published in 2011, guys. It's been over 10 years. Everyone knows this is exactly what's going to happen in the market. And here it is. Here's the 10-minute chart. There it goes. You know, it looks exactly like that paper. You know, here's the 2 p.m. announcement, 1400 hours New York time. Boom, crash, boom, rally. And there it is. So we can look at the entire day. 10-minute chart in the futures, that's probably daily open. So how did we do on the day? What percentage? It's an average of 0.5% gain over historically. I think it's even done better since that paper got published. Since the paper got published, it's averaging more. That was a 3% gain, guys. That was a 3% gain. Its average was only 0.5 back between 1994 and 2011, 2013. And it went up almost 3% yesterday. So there you go. So this just made up for like 5 other announcements. Even if they're broken even, right there on this one day, you made 3%. And it even followed like the path that it always does, like announcement, crash, boom, explodes to the upside. And now it's back to usual, right? You know, now it's going to probably drift down again. Really crazy. Really crazy. I mean, I'm traveling the world. I didn't trade the FI. I barely remembered which day it was. But I'm telling you guys, one of these days, I'm just going to disappear. I'm going to quit, and I'm going to go back to trading. And you better believe I'll be trading that day. I'm going to go like all in leverage. No, I'm kidding. You should never do that. But no, it's not market manipulation. It's just speculative trading. It's just what people do. GBEC premium rallied. I like that little rally in the premium. That's a good sign. I got to go. I'm already late. Oil, you guys know I'm very bullish on oil. And gold, I'm bullish on gold too. So there you go. Those are all the markets. I think I covered everything. Let's take a look at Twitter. If Twitter is down, oh, there it is. Twitter broke 50 bucks. Looks like Elon is getting close to buying Twitter. My trading view, oh, there it is. There it is. Updated. Twitter went up. Twitter gapped up. That's a good sign. It means Musk might actually get to buy it. Still hasn't broken the prior swing highs, though. Let's see. Let's see if it ever gets to 54 bucks. So I did get in touch with someone from Russia, or I actually got in touch with a friend who was a friend from Russia, and they sent me screenshots of the Russian ruble on the black market and how much you can actually exchange Russian rubles for. The dollar rallied a little bit with the Fed statement, but let's see. Well, actually, it fell on the Fed statement, but it's rallying right now. I still think the dollar has short-term topped. We will see. So the black market rate of the ruble is in the mid 70s, so it's around 75. So if you're trying to convert your rubles into dollars, it's actually in the mid 70s, which is still pretty good relative to 150. So let's see if the black market rate comes down and meets the official government rate. All right, and on this note, I do have to run. Thank you all so much for watching, and see you all on the next one. Bye, guys.